Okay, right now the market is showing real weaknesses. And if you're not prepared, you could see your hard-earned gains vanish like that. In today's video, we'll break down, exactly what you need to be looking at for the 8 essential tips to know exactly when to sell your stock. And this isn't about panic selling. It's about protecting your profits and avoiding costly downturns. Stick around because each of these tips could mean the difference between walking away with solid gains this year or being stuck in a losing position. Do you realize that the majority of traders spend so much time learning how to get into a trade that they forget about learning how to get out of a trade? And that's why they'll sit there and they'll hang on to a trade as it turns against them. They turn into that deer in the headlights as the losses continue to mount. We're going to go through 8 secrets to know when to get out. And we're picking these up off of IBD's fantastic article. And it covers the 8 secrets to when you should sell your stock. So what's the first thing we're going to be taking a look at? Is everyone makes mistakes. But be sure to cut all losses short. Even the absolute best investors don't win every time. Most investors, they typically have about a 45% win rate to 50% win rate. So that means about half the time that individual trade is going to turn out to be a small loser. You want to keep it a small loser. Unfortunately, because they focus so much on learning how to get into a trade, not how to get out of a trade, they let their small losses turn into disasters. So you need to learn how to cut your losses at 7 to 8%, especially when the market starts to show weakness. And you'll thank yourself later if you learn how to do this. Well, what does it look like when a market does start to, show some weakness? Well, let's take a look at that. Here's a chart of the S&P, the spiders. And this is a weekly chart. And as you can see, yeah, we climbed up here and made some new highs, but all of a sudden we're getting these spinning top dojis. And some of the other things that are showing up on this chart that give us reason for concern are these. They are basically, look what's happening with the momentum. The momentum as the prices are rising is falling. So that's a telltale sign that weakness is coming into the stock market. That's exactly. So for this secret, again, make it part of your rules and make it part of your plan to get out of a trade if you've lost 7 to 8%. The next secret, if you don't sell too early, you'll sell too late. Remember, the market can lull us into thinking gains will keep growing forever. But, seasoned trader knows that that's not the case. Bill O'Neill pointed out in his books that typically when a stock gets up 20 to 25%, you better look at taking profits at that point, because typically stocks will run up 20, 25%, and then they go into rest mode. And when the stock goes into rest mode, what is that? That's dead money. Have a plan to sell. Have a sell plan in place before you buy. Now, you're going to want to stick around for the final secret, because it'll tie the bow around this one and give it to you. Say, hey, yeah. Well, oftentimes it shows you when you actually make your money in a trade. So for this, I want to indicate that have a plan to sell before you enter the trade or before you buy. One of the smartest things that I've learned how to do is establish my sell plan based on swing lows. I'm a pullback trader, and so if the stock pulls back and hits a swing low, then bounces, that swing low turns out to be a very strong level of support. And if it's violated, that means it's time to get the heck out of Dodge. Check out this chart. I think we can actually use the S&P here. Here's a perfect example. Is each one of these lows turns out to be that was a perfect buy point. And as you can see, these are high probability places to buy, and they've oftentimes coincided with my momentum shifting and turning back around. This is a weekly chart on the S&P, and you can see when momentum shifts up, that's the place to buy. That's a high probability place to buy. And where's my stop loss? Just immediately below these lows. And how much of a potential stop would that be? About 3.5% on the S&P. And it's different for every stock, but that's a great line of demarcation for when to exit and get the heck out of Dodge on that particular stock or ETF. Okay, the next secret is don't let a decent gain turn into a loss. Sometimes you'll see a stock ETF run up 10, 15%. And if you don't have an exit plan in place, that 10 or 15% or even 20% could in fact turn into a loss, which, believe me, letting that happen and just sitting there on it as it goes from a 20% gain to a 10% gain to a 0% gain to all of a sudden, you almost feel helpless to do anything. And here's a perfect example of what that looks like on a chart. And let's take a look at a chart of one of my favorite stocks, Tesla. Tesla basically went on a significant run. I mean, this is Tesla back over here in 2019, and it has gone on just a tremendous run. But let's say you got into Tesla right here about when it was making this nice huge cup. We buy here, we ran up to here. Oh my gosh, that's 83%. That's amazing. And then guess what happens next? What happens next, and we'll just click this by a week at a time, I start getting a reversal signal. And this first move down from the high is actually about 19%. Now I had a gain on this of 83%, right? So 83%, I'm sitting there going, it's not going to go much lower. Let's see what happens next. Pow. Yeah, it kind of sits up. Oh no, stop. And as you can see, it just pops down and continues popping. And again, remember, here's my break even mark right there. Let me throw a line in it to show you where my break even is. My break even is about right. Let's say about right there is break even. So I've already come back and I've erased my 83% gain. What happens so oftentimes is a buyer will hold on to it going, and do the prayer. I just pray that it comes back. And because they want to pat themselves on the back for being a brilliant stock picker. But what happens? Let's continue this little parade. It did come back a little bit, but then over the next few months, and again, this is a weekly chart. Look what happens. All of a sudden, I now am underwater. How much am I underwater? Well, if I bought it here, approximately on this line, and I've dropped to here, well, I've just dropped 56%. Now, the thing that's really crazy about dropping 56% is that the amount it takes to regain that amount of loss. So here's a little chart that you want to become familiar with. If I lose 50% on a particular trade, how much do I have to make up to gain that back? And as you can see, I need to gain back. If I lose 50, I need to gain 100. But on some of these entities, especially during the downturn back in 2022, they went on and fell 70, 75%. Check this out. If I lose 75% of my initial or what I originally paid for that, I have to gain, there's the gain I need, 300% to make it back. So that is exceptionally, to get 300%, oftentimes, I mean, that's challenging. And what you'll find is stocks tend to go down about twice as fast as they go up. So therefore, it is critical to control your losses, protect your capital, because we don't want to. If it's taking me twice as long to go back up, I'm wasting time and effort and money. Another way of looking at it on this same chart is just roll down here. Check that out. You see it goes exponential and starts to run up. And by the time you get up, if you've lost like 90% of it, you have to have 1,000% return in order to make that up. Hey guys, if you're getting some value out of this particular video, please remember to hit the subscribe button and turn on notifications. And that way you won't miss out on more tips and also my stock trade and setups that I provide on a weekly basis. So I hope this has helped. Let's jump into the next secret right now. And the next secret is, I love this one. Don't marry your stock, just date them. Oftentimes people get so locked in to that concept of thinking that they fall in love with the stock and they basically don't want to get rid of it. It's so painful. It reminds me of a story of a young lady I was helping out in California, and she had inherited a lot of stock from her mom, and she had like 5,000 shares of this particular stock. And what she did was she said, "Well, Dennis, can I do covered calls on this?" And I did the math for her, and I found out, yeah, on the 5,000 shares, you should be able to generate at least $1,000 per month on of recurring revenue. And she goes, "Oh, that's great. Oh, I can't wait to start." And then when it came down to the rubber meeting the road, what she came back and says, "Dennis, I can't do it." I go, "Why?" She said, "Because if if they're called away, if the shares are called away on the covered call, those are the shares my mom gave me." And I get this, wanting to be sensitive about that. But if that happened, and she didn't even have the stock certificates. I mean, all she had was shares in a brokerage account, and which could have been replaced if they would have been called away. But she says, "Well, it's not the same thing." So I go, "Okay." And so she passed on that, $1,000 a month. So, you've heard it said, for better or worse, but in trading, it's a bad idea to marry your stock. If you see warning signs, don't hesitate to kick that stock to the curb. Remember, it's better to protect your capital than to hold on to a stock for sentimental reason. The next is sell your losers first. Selling your losing stock is very, very important. That's why it's important to have a plan. It's also very, very, very important to journal and keep a spreadsheet or a stock tracker so you'll know which is your best performer. And here's a little hint. If you get into a stock, have both a price stop loss and a time stop loss. And what's a time stop loss? A time stop loss is if it doesn't go up a certain amount within approximately 2 weeks, 10 trading days, you may want to get out of that stock and wait for it to reset up, simply because it's not ready to move yet, and you've got part of your capital sitting in it's dead money. It's not growing. It's not going anywhere. So that's another thing to be thinking about. The next secret is when buying a stock, focus on both fundamentals and the stock chart. When selling a stock, focus on the chart. The chart basically is what you want to be doing. And that's what I love about the Investor Business Daily method with the Can Slim is I only trade stocks that meet the IBD fundamental qualifications of being a top growth stock. If it does not meet those basic criteria, it doesn't make it onto my final list. So that's one of the things that we're going to cover in the next secret that will help you understand that. So when it comes to selling a stock, the chart is your best friend. technical indicators like volume, TSI, moving averages, all tell a story about the basically the direction a particular stock price action could be going. So pay attention. Don't ignore the warning signs. The next secret is the most important sell rule is to buy at the right time. This is so critical. What this is telling us basically is don't chase. In other words, if the here, let's go back over here to the Tesla chart. We'll take a look at this. The best way to avoid difficult sell decision is buy at the right time. Yeah, avoid jumping into a stock during market corrections or near the end of a long uptrend. Oftentimes, I'm a pullback trader. I like to trade the pullbacks during the move up. However, I'll trade the first two pullbacks, but usually the third or longer pullbacks don't work as well. There are danger signs. So that's an example of how and what to avoid. Right now, with the market, turning back down, you need to be especially careful when you are entering new positions because the probabilities could be against you. If you time your buy right, the selling becomes a heck of a lot easier. And I'll show you exactly what I'm talking about. When Tesla was up here at this, making these all-time highs, so many people get so excited, and that's when they want to get into the position. However, it rolled over and started falling, started into a downward trend until it accelerated dramatically over here. So have a line in the sand. And for mine is when we go below the 8-week moving average, which equates to approximately the 50-day moving average, that's a sign of dramatic weakness, and I want to be out of the way. I will reconsider when my momentum gets down into the lower reversal signal, the lower reversal zone, and this is a higher probability to trade. Like even picking up Tesla down here on this bounce off support would have led to approximately a 40% gain. So you have to be aware of those things. And over here, if I keep going to the right, you'll see, all of a sudden over here, Tesla rebounds and then starts to move up very nicely. And this last rebound goes up. This went up, from the bottom to the top, went up about 113%. In what amount of time? Went up to 113% in 7 weeks. And then what happened is we basically have continued to rally with Tesla. And then all of a sudden, now I'm back into a new uptrend. However, it ran back into a resistance area and started the process all over again to reset itself. What's going to happen now going forward with Tesla? Yeah, I think Tesla is we're not supposed to be talking about this, but I think Tesla is out of the woods. However, I will trade the chart in front of me. And right now, Tesla's chart is saying, I can't break out of this downtrending resistance zone. So that's whenever it gets back up to that area, I want to avoid Tesla like the plague. Time to sell, time to buy. Understand that, and you'll do really, really well in the market. Hey, if you found these 8 secrets helpful, you're going to want to watch this next video that's going to pop up. I go deeper into some of my other advanced strategies about how to protect your portfolio during volatile markets. So click on that and leave a comment. Let me know what you think about it. Aloha and God bless everybody.